Just couple housekeeping items. On the bottom of your screen, you actually can see a question answer Q&A little icon, and you could put your question there. At the end of the webinar, if we have time left, and I will answer those questions. Let's just get started. And today, our topic is about compliance, and I have kind of three focus point in this hour. One, I want to talk about this PPP money. A lot of people got it already, and some are getting it as we speak. So how to handle this free money. And then I also want to talk about the retention credit some employers are getting and or are applying. So what kind of requirement is there? Then as an individual taxpayers, you got your stimulus check. And so all of these, what does that mean to us, to small businesses when you receive government money? I don't know whether you have experience related to receiving government money. And if you know people who are in nonprofit industry, and have you ever heard of them? Oh, you know, they receive government money, they need to be audited every year. And this is part of compliance too. So when you receive government money, it is expected that you will do things according to their requirement. So we are exploring this with our small businesses because a lot of us probably never ever received government subsidized dollars or free loans of any kind. This will be the first time in your lifetime and to encounter this kind of situation. And how do you do it? And to make sure that you are not only in compliance and also receiving the benefit you are intended to receive, and also do not get onto the other spectrum and which will be charged with criminal charges at the end and sitting in your personal record. So we will dive in and go through this hour with a lot of information to share. And so let's do that. And free money comes with big compliance requirement. And right before we dive in, I want to give you a little bit information about myself. My name is Ying, and I have been doing these webinars for a while. And I serve on National Taxpayer Advocacy Panel, which is a federal advisory committee to IRS. And ideas on how to improve IRS, how our taxpayer advocate office works. They are my business. So you want to relate your experience and your recommendation to IRS to me, and I as a member will deliver that to the group of people, and collectively we make recommendation to make IRS a agency that works for the taxpayers. And then I'm an author. I wrote a book, and I'm hoping to write more books. And my first book is called Appointment with Ying at 8 a.m. And it is a book, it's a story book of how one person to start a business. It's a self-realization of my own and also of yours if you read that book. And I want to make a no responsibility disclaimer because it's so important. You know how rules are just coming in and I learn it and my staff learning it, but that doesn't mean for this giving moment, what we knew, what we understood, it is going to be whole truth for next day. Things are continually evolving, but we want you to learn with us. That's why we have this 3:00 p.m. webinars all the time. We don't stop. So I will talk to you again on Thursday. I'll talk to you again on Saturday. And the whole purpose is that the information is very fluid and we want to learn continuously. But what I am showing you today, it is already a very solid study on our end, and we want to bring that to you and making you aware of what's going on. So COVID-19, a new understanding of COVID-19. Is it really a period where we can call it beginning and call it ending. No, it is not like that anymore. COVID-19 start to become our lifestyle. Let me tell you why I say that. And if you recall, when we just shut down the restaurants and started this isolation, this quarantine, and there's a lot of fears in many people's mind. We don't know what that is. And then now, a month and a half going into quarantine, and there are people could not even hold on to be that way anymore. Their lifestyle couldn't really make them stay still. So they want liberty, they want a freedom. And then COVID-19 is not going away because it is a person-to-person contact kind of disease. And we just need to, I'm saying that not to make all of you depressed right this moment. No, I say that just because it is a reality for small businesses. So if you were going to be successful in developing your business or continue on your business, you have to mentally accept that is just reality. From macro point of view, there's so much talk on the media, and talking about open economy means losing lives. Talk about it's a party line, drives, whatever, and it talks about how we can afford to have gas price go on negative. So there's so many things that is not really directly related to us, to our skin. It is really kind of a news, is the environment that can make us easily depressed. And I am trying to bring you back to your own reality. I always say that it is good to have that macro view for the world, and especially leaders. The higher position you are in the human society, the more capability you should have to look at things macro and to see everything at once. But for people like me, for people like you, and we are together is because we didn't have the responsibility to make sure that every state gonna go for certain rules and regulations. And we are just here as a very small part of the social fabric. And we want to make sure that we learn to focus on micro, like small. We focus on what we do, because if we all can do that, if all of the small businesses can do what I am saying we should do, and eventually the big picture will get better. But somewhere we have to get through the grassroots. So this is where we say that as a small business owners, take a micro view of situation, sort out matters that matters to you today. Don't worry about whether testing is enough or not, because you're not there to resolve that. And do the best you can to survive, maybe even thrive. Who knows? Maybe you come up with brilliant idea now, knowing how to grow your business, then you're gonna thrive, right? Understand all the government requirement for free money, and to ensure you receive it and you use it for your own benefit, for the good purposes that the government, thought that you will use it for. Okay, so now let's look at what we got so far from the government for free. So far, we have stimulus checks, right? And we have EIDL loan application for that 10,000 emergency grant and the forgivable portion of that SBA loan, and PPP loan, PPP forgivable loan, local government grants. A lot of people here in Iowa got that 25,000 and got the 10,000. Those are free local government loans, not loans, I mean grants. And then unemployment benefit, all right, 600 for 18 weeks. Didn't you get that, right? Even so, proprietorship and people without W-2 are eligible for COVID-19 unemployment benefit. Then retention credit for employer. These are the list of things that if you look at the list, you go, oh, I don't know what you're talking about, this one. then that just means that you have not really followed my webinars and you have not really looked on internet for your own interest. You probably went on internet to look at news that depress you greatly, and then you lose sleep. Next day you look at the depressing news again. And why do we do that? And let's refocus ourselves and really figure out a way to not only survive, and we're gonna thrive. All right. And I want every single one person I know in my own life who works with Community CPA, who are our friends, our clients, and I want you to go on this path. So now let's dive into that PPP. So you got money from Payroll Protection Program, and that is called a PPP. A lot of times when you run into apply for that PPP, all the information you got is free. It's going to be forgivable. It's a loan you can get, but it will be forgiven. So get it. You did, you got it. All right. So now what do? You have the money. And so let's understand the purpose of the Payroll Protection Program. And it is a loan. Okay. That's why it was done by those banks, the lending institution, because they are loans. The loan term on that money is 2 years, 1%. So in other words, let's say you got PPP, but you didn't do anything like what they were going to have you do. You didn't pay payroll. You literally close your office and you haven't really spent the money. You know you cannot save those money. They become your loan. So 6 months later, you will start paying interest. You will have to be on amortization schedule to pay it back in 2 years. Okay, so it is a loan. I want you to remember. However, this is a special loan. It's a loan that it says if you do 1, 2, 3, 4, it is forgivable. And the bank will issue a 1099-C to you saying that you don't need to pay it back anymore. So what do? Number one, you spent it within 8 weeks' time after you receive the money. Okay. Number two, you spent it on the following items: payroll cost. And remember what's in the payroll cost, not just your payroll, but also the employer portion of your health insurance, employer portion of your 401k contribution, employer portion of your pension contribution. So all of these things employer paid unemployment account quarterly dues. All right. So those are payroll costs. And what else included in the money you can spend? The rent to rent your business place. Okay. The utility cost in your place, and in the rent. Remember how the landlord, they don't give you the property tax every month. They send you a big bill for at the end of the year to tell you that, this is the allocation of Can fee, property tax, and you pay it. And folks, remember, this 8 weeks need to have that portion in there. So I would call up the landlord, tell the landlord that, hey, I got PPP dollars. I'd like you to allocate my property tax Can fee for the 8 weeks. Please send me a bill for that. Then you pay that out of the 8 weeks time you got. All right. That is qualifying. And also what also qualifies is your utility I mentioned, but it's the mortgage obligation, the interest expense. But here the mortgage is the building that you occupied for your business. And if you don't have a home office in 2019, you can't claim your home mortgage. But if you were working from home and you have a home mortgage in 2019, that portion of 8 weeks can come in to play. And another thing to know is the PPP dollars from the bank standpoint, it is a forgived loan, right? The bank says that I loan you money, You don't need to pay back. So they will issue you 1099-C. But when you fill up your tax return, the 1099-C would have exemption to not include that in the income, because otherwise you will accidentally include that in the income and then it's become your income, all right? So you would select the one that says subcode B, which will allow it to be not included in your income. So these are steps that you will, as a business owner, and you sure you can say that I rely on my tax person to do that. No, why? You should know that yourself. That's why you're here. Listen to Ying telling you this, and make a note. When you do taxes, make sure you didn't include PPP, forgivable portion of loan, as your income, right? So now, how can we literally make it free? It's not like you just sit here, oh yeah, I spent all the money within 8 weeks, so I got it for free. No, you have to do more paperwork here. This is a compliance. This is what a lot of small businesses are not good at. Okay, and I sitting at my chair, I cannot tell you how many million times, and I see people, small businesses, and they think they got it all done right, and then goes to whatever they did, then several months later came back, it is not right, it is done wrong, and it takes triple, double times to really reverse it. So what I ask you to do right now is very simple. You just focus on what I am talking about, really learn. And if you can be half of the expert plus your accountant, you'll make it right. All right. So number one, to make it, to have this being free, you have to submit a application to your lender. Let's say you got this PPP loan from West Bank. Then you need to go to West Bank to see whether they have an application that is already made for you. Okay, a lot of banks will do that, even though we don't have any one of those coming out yet because they're still developing. But I truly believe they would. Just like when you applied for PPP, every bank has their own forms come out, right? So you ask for that application. And now the document there's 5 things I want to mention. Number one, you want to document your payroll in that 8 weeks. For example, if I receive the money today and 8 weeks from today, 8 weeks time, so the payroll I paid, I need to be using the PPP dollars, right? So you want to keep record of that. Then you may say, well, what is the best record to show that I actually made payroll payment? Your canceled check is a good record, and your payroll taxes is a good record, and your bank transaction, if you don't issue check, is a direct deposit, and those are good record. So here we have 2 items I listed. Payroll tax filing report to IRS, that's a good record, and the state income, payroll, and unemployment insurance filing, that's a good record, right? So there you go. We have some examples for you. Again, you would follow what your bank is asking, but you do need record for payroll. Then the next, they want you to include canceled checks, payment receipts, transcripts of account, or other document verifying payments on covered mortgage obligations, payment on covered lease obligations, covered utility payment. You see, you can't just say that, oh yeah, I paid it. No, the bank want you to show record. So make sure that you already got the invoice copy from your landlord. You're already making those payments. All right. Number 3, documentation to show the number of headcount and the wage level that you had before PPP time, and the document that you actually restored it on June 30th. I know it's very wordy. Let me explain to you. On June 30th is a very important date. And in my next slides, I'll give you those dates. But June 30th means that you have to restore your payroll back to prior time, before COVID-19 time. And when I say restore, there's two things to look at. Number one is a head count. It's head count. How many employees you have by names, social security number. All right. Number two is a wage level. Let's say February 15, the COVID-19 officially started in the country. And by the end of April 30th, you reduced everybody's salary by 50%. You go, well, I can keep you working, but here I reduce your salary. So that's okay. The government says that by June 30th, you need to restore that back at least to 75%. Make sense? So this is what I mean by restore it back to June 30th date. So on that date, you need to prove that you restored it back. I'll give you more details. Just hold on. The number 4 is a certification form to your bank, and to say that your bank will give you a certificate saying that it's all true, nothing but truth, and you will be charged perjury if you lied. And so that is a legal documentation. It is literally can put people who are not in compliance and lying about things in jail with that certificate. So make sure that you sign it with the knowledge, knowing what you're signing. And then any other document the banks want, you need to give them, because that's their job to make sure the forgivable portion is correct, accurate by SBA standards. And then you ask me, oh yeah, what happened to the one that I didn't get forgive? I got 100,000 and the 50,000 didn't qualify. What do I do? Nothing. You have the money and you either pay it back quickly enough that you don't end up paying interest yet, or you pay it back within 2 years' time. That's a 1% interest charge on that money. And so here I actually carve out a language as like a threatening statement to those who doesn't not follow rules. It says that loan proceeds, which is the PPP, used for an unauthorized purpose are not eligible for forgiveness. Under CARES Act, a borrower, which is our small business owners, that knowingly use the fund for an unauthorized purpose may be subject to additional liability, such as charge for fraud. Okay, so knowingly. And we already told you, and don't use PPP money to buy a new truck, okay? Don't use PPP money to buy a building, to upgrade your home or anything like that. Use PPP money for the intended purpose when you applied for it. All right, now let's say, what are the key dates for PPP? And I am really proud of our staff who are working this with me, because they really try. When we work our business, I always try to pull out the knowledge with a very simple layman terms. Like, I always tell people that English is my second language. I really don't have big words, even if you want me to. So I am simple in expression. So sometimes when I look at things that are very filled with legal jargons, and I'm not good at repeating it. It's just not part of my English yet, but I have a way to think, to transition that whole legal jargon information into a plain language. And this is where a lot of my clients, they love me for that. So they want to hear me talking Chinglish, and we laugh about my accent. And my staff sort of really kind of took hold of that work habit per se. So our things are coming out of those government documentations always seems to be more clear and more see-through, so you can literally feel like you're getting hold of something instead of just going through your head, just lots of words. I don't know which one is important. And we try to really see through those words and pick the one that is important for you. So here, this is the key days for PPP. The date that you received your money, that's a key date. You want to remember that day. Let's say that is April 15th. Okay, and in out on the web, and people have all kind of idea how to be in compliance. One of the idea I pick up, which I think is not a bad idea, is to set up a separate bank account and or use your payroll account for the PPP proceeds. And a lot of our clients and the larger clients, they already have a payroll account. So what we always tell people to do is absolutely don't combine that with your regular checking. Because when you got the funds coming in, your regular checking always have things going out. You just have a hard time to really articulate whether these funds going out is legitimate. What if one of those things is you paying your kids' tuition fees? I mean, shouldn't be there, but it showed up right next to your PPP dollars. It's gonna be hard for you to say that you didn't use it for unintended purposes, right? So really be careful with that and put PPP amount in your payroll account or have a new account. So that is the date you receive your money. And 8 weeks period. So that's from, you got money on April 15. That just means that from April 15 to June 10, that's your 8 weeks time. And this 8 weeks time, you need to figure out the record. Remember I was telling you about the CAM fee and the property tax that you normally pay for your commercial property. And you need to talk to your landlord immediately. You need to have the landlord to give you that 8 weeks proportion for those things you're gonna pay anyway. All right, so really you need to know that you need to have all the record ready during this 8 weeks, because all the spending inside of this weeks is the first base for you to get a free forgivable loan. If you say, wow, this 8 weeks, I forgot to use that money, I didn't use anything, then you have zero to be forgiven. And then you just got a loan. You got a 1% 2-year loan instead. All right, so 8 weeks period. That's another timeline, so important. Then June 30th. June 30th is so important. I want you to remember it as June 29th. Don't wait till June 30th. On June 29th, you should already restored your payroll. I mean restored means that you got headcount qualified, you got your wage level restored. Okay, so let's kind of talk about this headcount thing. So headcount is a full-time equivalent FTE, full-time equivalent employee. So by federal standards, it's 30 hours. So if you have someone work for 30 hours, which means work from Monday to Thursday, 8 hours a day, and they qualify to be counted as one, all right? So let's say your January to February 2020, okay, you had headcount of 5. Let's say you had 30 hours work, 30 hours people working, and there were 5 of them. So your head count is 1, 2, 3, 4, 5. You have 5 social security numbers, right? So that is your head count before COVID-19. So what they're asking you to do on June 30th is to have the same head count over on June 29th and on June 30th, you meet that standards. So then you will say, well, what about the 5 head count is not the same 5 I have on June 30th. That's okay. You don't have to have the same head count. And in my very early time when I do webinar, I even told people that if you have hard to manage employee, let them go on unemployment, and then now you restart, you don't hire them back. You hire someone equivalent. And you can hire another person with less pay and as a head count. So that's okay. So you meet the head count requirement, right? But there's another requirement is for wages level. Wages level is a cumulative wages that you have at that time. Let's say you're between from January to February 2020, your wage level was certain amount, say 5,000. On June 30th, they want you to meet that level. Is the minimum you must meet is 5,000 discount by 25%. So if I just simply do that, and that means I can pay people with $3,750 wages level, I am still considered restored. Make sense? All right. So that's June 30th restoration date. So very important. And what if you say, well, Ying, what happened if I got my PPP at the end of May? Well, that restoration date doesn't change. You still have to have that on June 30th. Okay. So application for forgiveness. Oh, you say, well, when did I start? When did I start to do this forgiveness application? Of course, you need to start after July 1st because you need to meet the June 30th restoration requirement. You need to spend all your 8 weeks money and then you can apply, right? So you want to apply for forgiveness on June 1st, the earliest, because you may not spend all your money yet for that 8 weeks, right? And where do you apply for that? You apply for that with the bank that you got money from. And maybe you didn't do it from a bank. Maybe you did from a professional lender, professional broker firm. I believe you will know who is the lender from the brokerage, and they will facilitate that, or you will deal with the bank directly. So that's where you apply. But we still have time, right? We have up to July 1st. But the 8 week spending, you don't have time. You need to hurry up. And the earliest PPP recipients, I think, is at around April 10th. So you do have like to June 5th to finish spending. So if you're not doing it yet, and make sure after this webinar, you want to start doing it. All right. Now, I am going to go through examples. I know the examples is the best way to figure out all these theories we were talking about. And I have 4 examples here, and I will point to you the area that maybe is still a little bit wishy-washy because there's too many noise on the government side, and I couldn't figure out totally what that is. But I think I had made decision that this is what it is, but I will point that out to you when we go through those examples, so you don't get caught off guard thinking, what is Ying talking about? Trust me, I try to make sense of everything I say. Remember, English is my second language, and I'm really trying to be good. All right, so example A for PPP. So example A, company received 100,000 PPP from on April 15. And the company spending from April 15 to June 10th. 8 weeks time frame on eligible item. And I want to make sure that you know, let's say I spent the whole 100,000, okay? And you must spend 75% of that on payroll, and the other 25% of less on the rest of the stuff, the rent, the utility, the mortgage interest, you know, those things. And restore. You restored your people on June 30th. And then you apply on July 1st or soon after you finish spending all your money. And so you spend your money on June 10th. If you already restored everybody by June 10th, you can apply. But if you haven't, you wait for June 30th, then you need to wait until you restored your people before you go for forgivable application, right? So now let's run math over this, okay? So during the 8 weeks, you paid out wages, 78,000, and rent, utility, 22,000. And you restored number, and there was a 15 full-time employee, and you restored all of them, okay, for on June 30th. And on July 1st, you apply for forgivable loan of 100,000, and then you will get it 100%. So you get 100,000, don't need to pay back, you spend it. So in this particular one, I want you to pay attention to. You see, my wages, it was more than 75% of my total PPP spent, right? I spent 100,000, and 78 is on payroll, 22 is on other things. So I spent more than 75% on payroll. So that way, I qualified for everything. So the last sentence, which is very important, I mentioned that already, that's a year-end tax filing. So when you file your year-end taxes, your bank will issue you a 1099-C. So what is a C? 1099-C is not 1099 miscellaneous, right? That's your income when you work for somebody. And it's not 1099-B, that's your interest. And it is a 1099-C. And that is a forgivable loan. The loan portion you got, but you didn't pay back. Normally, you have to add that in as other income on your tax return. But in this case, with PPP, it's not other income. It's not taxable. And that treatment can only happen on the tax return, okay? So that is our A. What do you think? Clear? Simple. Am I right? All right, our example B. Example B received money on May 15th. It's coming, got 100,000. And the spending will start from May 15th to July 10th, okay? And the restoration is on June 30th. You see, I would have to restore that faster. Even, I got PPP loan on May 15, I need to restore right away, almost, right, in a month's time. And then I will apply on July 10th after for forgiveness of the loan. So example, during the 8 weeks payout wages, I paid out 78,000. And the rent utility, 22,000. Restored number of employee on June 30th. I wrote it wrong, that's supposed to be 30th. On July 1st, to apply for forgiveness of loan. And then the year end comes, I am good. I don't pay taxes. I got my 100,000 properly spent. In this example, again, I spent on wages for 78,000. So let me refresh your memory. In early slides, I said, what is qualified wages? Qualified wages is not just your gross pay of your employee. They also include the medical insurance that you're paying for your employee, include the 401k you're paying to your employee, and include the pension that you promised to your employee. So all of that is part of your eligible wages. And then the leftover, and you have rent, utility, mortgage interest to use that for, okay? Don't forget your CAM fee. Don't forget your property tax. All right. Our example C. All right. This person got money on May 15, 100,000, spending it 8 weeks, May 15 to July 10, and restored people on June 30th. Oh, apologize for the phone call, and applied forgiveness on July 10th, as soon as they finish spending. But here is a story. Look at it. During the 8 weeks paid out wages, 50,000. And actual rent and utility is 22,000 paid out. But right here it says, but only qualify for 12,500. What do I mean? I mean that the PPP dollar came in, $100,000 deposit in my bank account, and I only paid 50,000 on payroll. But I did pay out 22,000 on the rent and utility stuff, but I cannot be forgiven for all 22,000 because I can only be forgiven for that total, and 25% or lower is rent utility, 70%, 75% has to be the wages. So that means the 50,000 means 75%. My other 25% is what I can use. That's only 12,500. So now your total qualified PPP amount for forgiveness is 62,500. And you restored number of employee on June 30th. Good for you. And on July 1st, you apply for forgiveness of loan for 62,500. And the 37,500 is a loan with 1% interest, 2 years term, and need to be paid back to SBA. Need to be paid back to your bank. Your bank will give it back to SBA. Okay. So now look, you got 100,000 in your bank account, but part of it is forgive, part of it become your loan. Okay, because your wages spending only 50,000. Now, at the year end filing taxes, what's going to happen to you? All right, you will receive 1089-C for 62,500 from the bank. And you will do the magic election so you don't include that in the income. But do you include the 37,500 in the income? No, that is your loan. So you need to pay it back. So you will put that on your balance sheet. Until you spend it, you paid it back, but that's not your income. Okay, so it doesn't increase your income, but it does make you have a liability of 37,500. All right, let's see. What do we have on example D? Example D is where I had a point. I want to say that it was my limited study, but I think that is the way it is. And if some correction come along the way, you will hear me redo that example on Saturday. All right. So, but I want to walk through this with you. I don't want to avoid it just because we don't know for sure. Okay. Received on May 15, 2020, PPP funding of 100,000. Spend it. All right. And restored it. And restored, didn't restore it quite sure, and applied for forgiveness of loan. Now, let's look at our example. During the 8-week paid out wages 50,000. And actual rent utility was 22,000, but only qualified for 12,500. And you know that we did the calculation on example C. Total qualified PPP amount for forgiveness is 62,500. Now, what if you didn't restore properly? What if you tell me that, oh, Ying, no way, I can't restore. First of all, I don't have that many business anymore. And my employee don't even come back to work. They're scared. And I can't even get anybody to help me. It's not like I can go on the street and get someone to work. There's no way. I cannot restore. I only can restore 50% of head count. Okay, and so only restored 50% of the number employee on June 30th. This will reduce your forgiveness amount. All right, so there on, on all these studies I did, There are even people saying that, oh, if you didn't restore, you have to return, you have to be loan 100%. There is no forgiveness anymore if you don't restore. But more recently, and an hour before we start this webinar, their article came out and by one of the financial planning company, and it's not like coming from JP Morgan or anybody very influential, let's say. So it says that it will be reduced by proportion. Proportion just means that, let's say we restored 50%. So your 62,500 will times the 50%. So the only forgivable portion becoming 31,250. So what happens when you go to file taxes? So you will get a 1099-C for 31,250. So you don't have to report taxes, it's forgiven. But the bank will come back and say, hey, Ying, we only forgive you for 31,250, and you owe bank 68,750, and that need to be paid back is 1% interest, 2 years amortization, and figure it out. And then I will say, okay, fine, I'll figure it out. So I will include the 68,750 on my balance sheet because I got a new debt. I have a new loan, right? So that is how the restoration of employee counts and the wages, how important that is. So really, hopefully, and by the end of June, COVID-19 is not even here. But let me put in this way. This whole government requirement came out with, at that time, people were betting on COVID-19 to be done by sometime soon. Isn't that true? And now maybe it's not the case. So if by June 30th, COVID-19 hotspot is right here in Iowa, and you think that's gonna work? I don't know. I don't think it's gonna work. So it will be redeveloped. There will be new information coming out, but this should be the guidelines for you right now, how to prepare your loans to be forgiven. All right, so I sort of covered the content I want to cover related to PPP forgiveness application and what you need to remember. I really hope that I did a great job and you're sort of like, oh yeah, now I understand. I got money, I have 8 weeks, but on June 30th, I need to restore back to the prior time. And then after I finish my 8 weeks money, I am going to the bank to apply for forgiveness of that loan. If you got there, you're home, you're good with your PPP. Now, one more thing I want to talk about, and this is compliance for retention credit. And not a lot of people talking about retention credit because it's rather complicated. Lots of you are actually doing your payroll with a third-party payroll provider. You don't even do it yourself. And that retention credit has to be handled and done by your payroll provider. So if you are our client running your payroll with us, you are covered because we know what to do for you. But if you are doing with other people, you want to take what you see here to the payroll processing place, figure out how to take advantage of retention credit. And here is the eligibility, which means that who is eligible to get retention credit. And in one simple ways to explain to you, you know how you file payroll taxes on the quarterly? There's a 941 form and it takes chunk of our money away. And so we pay the employee, then we get shot again for paying to IRS, you know? And that $941, you don't have to pay if you qualify. And that is called retention credit. You don't pay doesn't mean that we're gonna short our employee because they already they made withholding taxes, they did a Social Security, Medicare. What do you mean you're not paying? So what happened to my employee? Are they losing that withholding? No, they don't. This is a government way to help you to get a free money to get through COVID-19. Retention credit. How do you qualify for that? Two things. You have to see a declining on your gross receipt. Gross receipt is what? Gross receipt in the very simple way is your bank deposit. It's the people who pay you for service or pay you for your product and what's come to the bank. So let's say you are in April and your gross receipt is 50% less than last year April. You qualify. And what else to make you qualify? You said, well, no, my gross receipt dropped for sure, but not that severe. It's like not 50%. That's okay. If the business is partially, oh, I have a typo there. See my Chinglish at its best. But okay, the business is partially or completely shut down by the executive order of each state. Okay, so for example, and if you are in Minnesota, and Minnesota did shelter in place, so businesses are all closed, and some businesses are partially closed. So if you qualify for one of those, you qualify. Okay, so even if you are still have residual income coming in, but you're partially closed, so you should qualify for retention. So that's the eligibility. Okay. And if the employer could not prove that, if you cannot prove these things and you took retention credit anyway, then you're just subject to compliance review. You have to pay it back. And for retention credit, IRS literally came up with a compliance list. They're saying that these are the things you have to have before you take the retention credit. And so this is the list the IRS give to us. The IRS said that for retention credit, you have to keep the supporting document for 4 years. And the document have to show how you figured the qualified, the retention credit. It's here says sick and a family leave. That is parallel. So there's three retention credit basically. One is the one I'm talking about for the shutdown and the gross receipt. The other one is sick leave and a family leave. So we're not talking about those things. Right now, I'm just talking about the retention credit for the business going down and also for business that is closed, okay? And so you have to show that those documents, how you figured out you are 50% down. So for, you know, if someone walk into our office, goes, we want to qualify for retention credit, then what we do is we will make sure that stay-home order is copy in the file, and we're also gonna make sure that the sales of prior year got printed out compared to this year. So we will do those kind of documentation to make sure that you're in compliance. We save it for 4 years. 4 years, and then, you know, the credit, as soon as you apply, you get it. Government is not coming to say that, oh, I want to see a record right now. No, but compliance comes. I always say to people that compliance is part of recovery. So if you look at 2008, that recovery is represented by all kind of compliance investigation that comes down through the pipeline. So I am not surprised. I would never be surprised if there is a compliance coming in and, you know, 3 years later, you have to face people to justify your retention credit. And, you know, 5 years later, your PPP got reviewed and you lost all your documents already. That's not cool. You need to have it, okay? So compliance is part of recovery. And I just listed a couple of things to impress you. So, you know, I don't want to scare anybody, but I want to impress you so you will know that to prepare yourself. IRS audit on business losses. And you can imagine how many business losses going to be out there for 2020. And you know that those losses can carry for 20 years in the future. And if you got so much loss the rest of your life, you don't pay taxes anymore, and you don't think IRS want to audit you for that? Of course they do. They did that to Donald Trump. He has like millions in business loss. So they're doing, I don't know how that audit went. I don't see any news to update that, but so that's what I mean, okay? And with PPP loan, remember certain expenses, you already got it for free, and you should not include that in your tax return to get deducted twice. And you don't think they're gonna come over to look at you just that? Of course they're gonna do it, okay? IRS audit on stimulus check payment that should not be paid to certain individual, and it did go to you. When you file 2020, you have a question to answer. That's how they do compliance. And the state audit on business deductions, income inclusion for state funding. And that $25,000 state funding, nobody said is tax-free. It's gonna be included in your income. And you don't think the state want to see whether you pay taxes for them? Of course they do. Okay, so that is something you want to figure out, whether the grant you got is tax-free or not. And the business who take retention credit and also deducted the 941 expense out of your accounting because you just took the number and did a journal entry and forgot you got a credit for that. That could be a payroll audit. You know who loves payroll audit? That's the Department of Labor. And they audit employees, and they want to make sure that you hire people back, you're paying the right wages. So there goes our compliance world. And on this one, I want to mention this. So I got a call from a client, and you know, they're quarantined at home, and they have so much anxiety because they just don't know what's going to happen tomorrow's business. And on top of that, they were thinking of getting married. My goodness, it's just a lot of anxiety, and they want to know, Ying, what to do with this, what to do with that. I say to people that, you know what, things are so uncertain. You just need to know that your 2020 tax year, you have to plan. And in our firm, we do tax planning in November and December. I always tell folks that we are actually really busy, not from January to April in the old time, but it's more in November, December, because everything can be fixed as long as December 31st didn't hit the calendar yet. So we can do something to help you to plan for 2020. So here are a couple of things we want you to keep in mind. And when you do your 2020 tax years and your business received government assistance, you want to really consider that. And your stock went from positive number to a negative number. Instead of having money in the stock portfolio, maybe you owe money to the margin account. If that happened to you, boy, you really need a good planning. And otherwise, you'll be ending up deducting $3,000 loss a year for the rest of your life. And I'm pretty sure that you can't even finish deducting, and you are already went to heaven. So that is our stock loss and something you need to plan. And you started a new business. Who knows? There are people prosper out of COVID-19 pandemic. Your business changed the way it was before, and now the old structure doesn't work anymore. For example, we have a restaurant, and I'm 2 minutes to 4 o'clock, so allow me to finish. And so we have a restaurant client calling, and they used to be this just a local bar type of restaurant. So now with COVID-19, they couldn't really open. So what they did is they start doing online kind of activity. So the owner used to be sole proprietor, now got hold of another good friend who is really a gig person. So they combine together, start doing the bar local plus online. So with this, they got a new partner. So the sole proprietorship doesn't fit anymore. So then there you go. You need a new structure. But you say to me that, well, I don't really want to do it right now. Can I do that at the end of the year? Let me tell you, yes, you can do that at the end of the year. Okay, and you borrow money from SBA, then you need to figure out to do your financial statement right so you don't report that money as your income. My goodness, you don't know how many people I see when they borrow money from the bank, they report that on their income. It's like they made that money. So it's really, I think people are just, I don't know, crazy. Yeah. And you bought merchandise from other country, and the COVID-19 got it stopped and at the port, and one bad never arrived, and you're in litigation. And I'm telling you, this is not one client. And so if you have things that throwing into litigation, that's another thing to plan. Okay, the reason I say plan is if you started a new business, and or if you started something, you're in litigation, you're estimating a $20 million loss. And I don't see why you do not do accrued accounting to start accruing your losses. Okay, so there's so many things we really could consider when come to the time to plan. With all of these madness, you decided to pass your business on to your son and, you know, just quit. Okay, then that is a thing you need to consider whether your son likes to be a business owner. Maybe he's like, okay, you can put on my name, but I don't want to work in there, and I don't want it to affect my paycheck, and don't bother me. And in that case, you probably want your son to form a C corporation so that you can contain all of these noises inside our box, right? So it doesn't affect your son's business. And what if you were in quarantine so long, and instead of falling in love more with your spouse, and now you're fighting and you got divorced, 2020, you need to plan, right? So that's kind of gives you a overall of my today's talk. I know I talked too much, and we really kind of running out of time, but I do have 3 questions, and if you allow me, I will go through the questions. And I received the first question. I received my PPP loan and it deposited to my business account without separating account. What should I do now? And if you haven't really spent anything, I hope you just received it. And don't tell me you received it on April, beginning of the April, because that make me worry. And whatever you, then just make sure that you spend them properly. And if you're still not spending anything, you can move that into your payroll account. But in any case, make sure that if you got that into your business account and you don't have anything weird going on in the business account, like something like paying yourself or paying your spouse, paying your children for tuition, and just use your business account for business and making your account as clean as possible, okay? And that would be my advice. And what about if you are a single person LLC as a 1099 contractor, how do we prove that we have restored the headcount on June 30th? So easy to prove as long as you are working, right? And that means you have to pay yourself, my dear. Write yourself a check for that 8 weeks. So that's the only way. Oh, you got it so easy. All right. So the headcount is yourself. And then do we need to restore part-time numbers? If we lose one full-time employee, can we replace them with 2 part-time employees? Absolutely. Okay. Part-time means they are less than 30 hours a week. Don't think that part-time means they work 4 days a week. No, they're not part-time anymore. They're full-time by SBA standards. All right. So that's great. And I think we had those 3 questions. This is today. I hope you really enjoyed it. I certainly enjoyed talking to Imaginable You, and kind of got used to talk to myself. But I'm pretty sure you learned something, and I hope you come back again on Thursday and a Saturday. And this is the joy of COVID-19 for me, to be able to connect with you on webinar and come back again. And we have a lot of, I know we had more than 60 people today, and I'm really thankful that you're there. And give good words out for Community CPA. And we want to not only survive, Community CPA wants to thrive with you. Thank you.